everyone. Today's topic is business planning, and we've decided that it's a topic of some importance and needs more of just an initial overview. So, what we've decided to do is we've put together a four-part webinar series on business planning. We're calling it the business plan from idea to action. And this first session today will be an overview. So we need to start with the look at the business plan process from beginning to end. And our intention is that over another 3 sessions, which we'll see some detail on in a minute, we will cover various important sections of the business plan. So by the end of the webinar series, by the end of the 4 sessions, hopefully we've communicated to everyone who participates in this series enough about the business plan where most of your questions and most of the issues surrounding the development of a plan would be answered. Let me give you an overview of SCORE. We're talking about overviews. I call this slide the commercial. We're a nonprofit organization that has been around since 1964. And in that almost 60-year period, over 11 million entrepreneurs have been assisted in their starting and in the growth of their business. There's 10,000 mentors and 300 chapters. We are in the Southeast New Jersey chapter, which covers the coast of New Jersey from Ocean County down through Cape May. I am in Cape May myself, and I'm the southernmost century, let's say, for the SCORE chapter. Our mentors are available for any time in the life of your business or as your business develops, but primarily in the startup phase. That seems to be where we can add the most value. And we have mentors in our chapter and throughout the United States that have industry experience in most areas. So it should be relatively easy to find a mentor who knows something about the kind of business that you're involved with. There's also a significant amount of online resource available through the SCORE webpage, and we'll touch base on that again later on as well. So here are the balance or the remaining 3 sessions in our webinar series. Again, today is the introduction. So session 2 is evaluating the idea, and hopefully any business idea presents solutions to a problem or problems. This is what I call the question phase. Make sure that you ask enough questions or pose enough issues surrounding your business startup so you get a good understanding of what you're attempting to do and how are you going to do that. And you want to be able to have a checkpoint at the end of this period where you can decide if you're a go or a no-go, and you can validate your idea. The session 3, which would follow in about a month, you can see the dates there in parentheses. I would say at the moment those are tentative dates, but the 3rd session would be research and analysis. So now that you have your questions lined up, you've developed the questions, you've developed the kind of information that you need to look at to make your business decision. Hopefully this seminar or webinar rather, will give you enough of a basis for how to go about researching the pertinent topics and information surrounding your business idea, where to go, what to look for, how to collect information, and then also, as a very important step, how to analyze that information to be able to make valid decisions regarding the market for your business, and also the sales potential. And again, it'll put you at a go or a no-go decision. And the fourth session in our webinar series is the financial side of this: feasibility, forecast, financials, and break even. And we'll talk about how to estimate costs and expenses, how to develop revenue assumptions and develop revenue values, and look at the costs and expenses connected to that, so we can put together some forecasts and also some financial statements in the form of projections. And the key to the whole thing, as you know, or as I'm sure you know, is cash flow. So if your business is not going to generate cash, and that cash is not going to be sufficient to support the endeavor, then you probably should stop, or you have to reevaluate. A good place to start is with an overall checklist of what you need to basically get started to plan or to prepare for the business planning. And I put together here some areas and topics. It's not all inclusive, but it does cover quite a bit of the ground. And you need a very good description of your business. What products or services are you going to sell? And define that as precisely as you can. Logistics in any business, very important, particularly for a startup. Where's the business going to be? What sort of legal structure will it be? Will it be a sole proprietorship, basically owned by one individual? A partnership, a limited liability corporation, which will give you some liability protection, although in many cases it operates as if it were a proprietorship or a partnership. And then other corporate forms, an S corporation or a C corporation. And I think that would be initially for a larger business, and for a business that has multiple owners, certainly more than 2 or 3, let's say. Does your business, or will your business, have an important trade name? Is it a technology business where patents might be important, or perhaps trademarks? How will you register your business? All businesses need to be registered on a local level, which may be at the state or a county level, and federally, particularly if you're going to have employees. And various businesses have different requirements with respect to permits and licenses. For example, if you're in the food service business, then your local municipality may have certain health codes and health standards that you're going to have to adhere to, and very likely that you will need a license. Can't overemphasize web and social media presence. Every business should be on the web. Most buyers now look to the web to help identify products and services that you're interested in purchasing. And if you're not on the web, you're going to lose a significant amount of exposure. It doesn't have to be a website that automates an order process necessarily, but you have to be out there. Resources, equipment, supplies, and then what kind of support do you need? Do you have the skills and experience as an individual owner, or an owner as part of a small group of people, to be able to do all of the things that are needed to run this business? Need to start to keep records of the business. You need to look at what kind of support you need from the outside. Bail is identified below, but this is just a tickler for what sort of outside resource you need. And of course, SCORE, providing mentorship, can also be a significant resource. Focus on the insurance for your business. This is critical, even from the beginning. You don't want to have something happen where you basically lose everything in your business because you didn't have some sort of insurance protection. And financing required. What do you need to put together this business? Do you have the financial wherewithal to be able to handle the initial investment, whatever that might be, and also to fund your business for a period of time as it gets up and running? Even if it's going to be a very successful business, nonetheless, there'll be some period of time where your revenue will likely not cover your expenses and you will need additional cash to be able to get through that period of time. What is a business plan? I'm not going to read this, you can read it, but it's the how, where, when, why, what uh, connected to your business. Uh, it also focuses on the costs, as we just talked about, and what are we looking to see as results from the business. And those results, from a planning standpoint, need to be measurable. So we don't want to have an idea that, well, we're going to sell so many umbrellas and, we're going to buy them for $1 and sell them for $2. And since we're going to make $1 an umbrella, we'll be successful. Well, that's really not measurable. It gives you an idea of a ballpark, say, but it doesn't really give you an idea of what the revenue value for the business might be. And again, what the ultimate cash flow might be. People look at a business plan and they kind of have this visual. I think this is a good visual to use to start out. And there's lots of stuff going on here. And you can see, in addition to all the individual components, there are arrows pointing in a variety of directions. So a couple things here. One is business planning is an iterative process. You're going to start the process. You may get halfway through or a third of the way through, and you may need to rethink some of this. You may need to go back and start again, perhaps, or make some modifications and then continue the process. And this is reminds me of the old joke about how do you eat an elephant, and you eat an elephant one bite at a time. And that's how we need to look at this sort of chart, let's say, or diagram. The first thing is, what is the idea? What is your business going to do? What do you want to do with your business? What do you want to sell? What's the concept? Why are you getting into business? And the second area really is to focus on what problems is your business going to solve. They don't have to be, necessarily a high level per se. So it'd be nice if your business is going to come up with the cure for all cancers. That would be terrific. But you might have a business where, you're going to market T-shirts, and those T-shirts are going to be of such value and price where you are, in effect, solving a problem for people who are looking to buy that type of T-shirt. So it's not very high-end problem necessarily, but your business still fills that gap or fills that area. The next thing is, what do you need? What kind of information do you need to make the judgment as to whether or not you go forward and how you go forward? What is the mechanism or vehicle for doing that? So you need to gather a significant amount of information. And then when you have that information, you have to analyze that information. So we're going to use in our webinar series 3 companies or 3 business startups as our device to get through a lot of the material. And one of them is a gym, starting a gym facility. So that analysis, might be, or could very well include, what's the population in the area where you're going to put the gym? What's the demographic information about the age and about the level of income. And this is the kind of thing where you'd research information and then analyze that information to see if at the end of that step, a business looks like it might be a viable situation. Next thing is a strategy. Uh, what's the plan? How do you put it together? How are you going to approach the market? What are the important things that you're going to do? And that's followed by, do, which is really how are you going to operate? So you have a strategy now, you've got a business concept, you have somewhat of a business plan or part of a business plan. And how are you going to do it? How are you going to sell those t-shirts or operate that gym? And the chess pieces there, I look at that and they represent two different things, perhaps. One is, pardon me, they may represent people. So it might be, one is an engineer, one is an accountant, one is a marketing person, or they could simply represent the functions. If you're kind of a lean and mean organization where either yourself or a small group of people will handle all of those functions. No matter what business you're in, quality is very important and needs to be a consideration in the planning process. So make the best things, that's a nice thing to say. It's a nice motto, let's say. But whatever you do, whether it's a service or a product that you're selling, you need to be attentive to the quality. People are buying quality now, and there are lots of offerings. There's lots of options for buyers of goods and services. So there's no reason why they can't look to a quality offering. And eventually you put all those pieces together and you develop and get yourself a plan. I throw this in because we talk about strategy and tactics. There's a ton of definitions about these, but these are a couple of definitions that, I think help us all get a little bit of a sense of what strategy is and what tactics are. What are the benefits? Twofold in producing a plan. They're twofold. One is it really gives you the ability or helps you with your ability to operate a business, whether that's controlling it or managing it or marketing your goods or service. You have some benchmarks so you can look at what actually happens versus what you projected. And you have the ability to improve upon that and measure how you're performing from an operational standpoint. Things don't always go to plan or things don't always follow your plan. So it should give you the ability to look at the plan document, particularly projections, and adjust those forecasts as needed. So your intention was to sell 100 ski suits every month, and you're only selling 80. And what's the gap? Why is that happening? Also, a business plan is a document that can be shared with others that are involved in the business, employees perhaps, to give those people who are participating with you a pretty good sense of what you have in mind, what's the projection, what's the mission. That can be very positive. And the second area that a business plan is very helpful for you is in the capital aspect of that. So how much is it going to cost to start the business? How much is it going to cost to run the business for a period of time before it reaches a level of success? Do you have the financial wherewithal to fund that? If not, how are you going to capitalize the business, which is simply, how are you going to fund that expenditure that you need? So a business plan can be used as a prospectus to help you raise money. And that could be with a lender. So a business plan is a valuable tool if you want to go to a bank and look for bank financing. It's also a valuable tool if you're looking for others to invest in your business as equity participants. Think about Shark Tank. Everybody's seen Shark Tank. People come in and they're looking for the sharks to invest in their business at some percentage, at some value. And that certainly is a way to raise funds. What are the sections of a business plan? This, again, is, there are different lists depending upon where you might look. And this is one that I've been familiar with and I think is a good one. So the business plan has a cover page, the executive summary, which is the most important section of the plan. We'll get into that in a little bit more detail later. A good description of the business, an analysis of the industry. And I throw out this question often, and that is, what industry do people think Nike is in? Think about that for a little bit of time. And if we have some time at the end, we can open that up for a little bit of discussion. Your marketing plan, financial statements and projections. What is the research and the research sources that you've used to develop your plan? And then what documents or references are important that you've used for developing your research, and that also should be included in the plan. It adds incredible amount of credibility to the value of the plan and to anybody who is reading the plan. It's a cover page, I think fairly straightforward. Owners and managers don't have to be the same. Could be two different sets. And whoever's responsible for the preparation of the plan should be identified, and the thing should be dated as well. If you're shipping off your business plan to somebody to read it, you may also have a header page. Okay, the executive summary, as I said before, this is the most important part of the plan. And from a couple of standpoints. One is it's almost your 90-second elevator speech. Assume everybody's familiar with that phrase, but if you have a limited amount of time to sell the concept of your business and identify the key items in your business and your business plan, the executive summary is going to include that information. In some cases, in the venture capital world or investment banking world, sometimes you get one shot at getting some funding, and that shot may be somebody initially reading only your executive summary. And it either goes in a let's look at it some more pile, or it goes in we're not interested pile. So the executive summary really needs to pack a good punch, so to speak, in developing information about your plan. And I always recommend that this should be prepared last. Sometimes people will sit down and try to fill in an executive summary from the beginning before they've gone through the balance of the plan. I think it's much better to go through all of the plan, have an opportunity to look at it, study it a bit, and concisely fill in what should go into the executive summary. These are the key sections of that. I have just a couple of slides here that just provide some sample selections from business plans. It's just to give you a flavor, nothing overly detailed. The second slide on this, I will point out that it does identify the mission, which is important. And also, what are the keys to success? What do you think are the most important things that you need to do to make your business successful? Let's talk a little bit about the description of the business, which is one of the sections of the business plan. Again, I mentioned we're going to follow or track 3 different businesses as we go through this webinar series. And I've selected a service business, which is a gym, a retail business, which is ski suits, the sale of ski suits, and then a light manufacturing business, which is producing a particular type of cell phone case. Now, when you think about describing these three businesses, there are some common things, but there are also some things that are particular to the kind of business that you're in. So describing a gym, what kind of a gym is it going to be? Is it going to be sort of a traditional gym, or is it going to be yoga focused, for example? Where is it going to be located? What is the target market? What are the facilities that the gym would have? How are you going to staff it? Et cetera, et cetera. So that just gives you a sense of that. Now, ski suits, I focused on children's ski suits. So this is, what are the sizes? What are the colors? What's the quality of the material? Is it for a certain age group? Is it for a certain demographic? And demographic, I think the important thing here is probably family income, and also location is important. So if you're going to sell ski suits in Vermont, that's going to be very different than selling ski suits in the southern portion of Cape May. And manufacturing businesses, what are the cell phone cases that you're going to make? Will it be for all manufacturers, models of cell phones? Is it going to be a particular design? My thought here is that these are going to be leather cases that are either a pouch or a flap, and they are sort of custom designed. So it's a little bit more of a high-end product, where you could have engravings, or you can have something painted on there, and probably makes sense to focus on, like just the iPhone 14s, maybe. That's a big enough market. Anytime you get into a market or a product that has a significant amount of options, i.e. phone sizes, manufacturers, that becomes very difficult from an inventory standpoint. So just by some of this conversation or discussion, we can see that the description of the business has similarities, but also can be very different based upon the business that you're in. Industry analysis, I use this funnel. I've used this in a variety of circumstances, but if I look at the ski suits, I'm in the retail industry at the widest part of the funnel. Consumer goods, attire and clothing, children's clothing, ski suits, and the sales distribution method is going to be, I'm going to sell these through retail outlets. So it kind of focuses us at each step of the way and puts more definition in the process. And this is important to think about this, particularly when you start to do research. So if I'm going to start to do research on selling ski suits, I want to make sure I'm in the right ballpark. I don't want to start with the concept that this is a manufacturing business. I mean, these ski suits have to be manufactured, but it's really it's a retail business, and that's very different from a manufacturing business in terms of data that you need to collect, and also how these different industries are interacting with the current economy. Different for retail, different for wholesale, different for service business, different for manufacturing business. And then a marketing plan, again, I'm using some sample selections here to give you a sense of what might be included in a marketing plan or in the marketing plan section. So you got a goal, what's your audience? How much are you going to spend? What are the tactics? And also the timeline for the rollout of the marketing development. This is in reverse order, that left column. I apologize for that, but so you can read it starting from the bottom. And then, who has responsibility, who's assigned for these individual steps. And that assignment should be, very, very distinct. Now, this assumes that there's multiple people involved in this business. You may not have that luxury, but still, if it's more than one person, you want to make sure that anybody involved has specific assignments and responsibilities to get through here. Okay, then we're going to spend a little bit of time now on the financial side of the business. And there are a couple of financial statements that are critical in putting forecasts and financials together. The first is known as a balance sheet or a statement of financial position. And this basically has three elements: assets, liabilities, and equity. And I'm going to give an example here to try to cover this and make it fairly straightforward. So let's assume that your business needs a vehicle. Maybe it's a truck, and you're going to arrange for that truck early on in the life of the business. So around the time of startup, you're going to secure a vehicle. And in order to do that, you found a pretty good deal where it's $5,000 down, a $45,000 financing from the dealer. And, that gives you a $50,000 truck that you're going to take into your business. So as the owner of the business, you're going to have to come up with that $5,000. So the $5,000, when you put that in the business, becomes an asset of the business. That asset is cash. And that $5,000 that you've contributed to the business becomes equity in the business. And, that would be the bookkeeping too. We're not going to worry about that at the moment, but just from a concept standpoint. And now you're in a position where you can go to the dealer and you can write the dealer a check for $5,000, which will reduce the cash. And you're going to sign for a financing, a loan for the balance of the value of that truck. And that loan is a liability. That's going to be money that you'll have to pay over 60 months or 36 months or 48 months, in order for you to complete your responsibility when you purchase that vehicle. And then you do receive, or you're going to take possession of, a $50,000 truck, and that is an asset of the business. So the second part of the transaction here will be you'll have $50,000 worth of assets. You'll reduce your cash by $5,000, and you'll have a loan for $45,000, which, again, over a period of time, you'll have to pay off. The second key financial statement is the one that perhaps we're more familiar with, and that's an income statement or profit and loss statement. And this reports the financial performance of the business. So it deals with a few elements. One is income, and then there's costs and expenses. So income is what's the revenue that the business is going to generate. So if I have my gym, I'm going to sell memberships. That's going to be revenue. I'm going to have a fee for people who want to just come and use the gym for an hour or for a week or whatever. And I'm going to have a fee or charge for that. That's also going to be revenue. If I look at costs and expenses, let's go to costs first. Costs generally are more sort of variable. They're more connected to the production of something. So if I'm producing my cell phone cases, a cost might be the leather that I'm going to need to buy and put into the production of my cases. Expenses for that business, or an expense for that business, might be the cost to maintain my webpage, or the cost to have a salesperson looking for potential customers. And that becomes a little bit more of a fixed item, doesn't necessarily vary by volume. And in the beginning of a business, in addition to perhaps buying a vehicle, which we talked about a moment ago, uh, you're going to have other items that you'll need to secure, procure, and that is also going to be in the cost and expense category. But unfortunately, at the beginning of the business, you don't have any income. So whatever those costs and expenses are to get started, you'll have to fund that in some way before there's a significant stream of income to be able to cover that. And then when you start your business, it's unlikely that your business will generate enough revenue or have enough income to cover all the costs and expenses. There's going to be that roll-up period where it'll take some period of time, some period of months perhaps, generate enough commercial activity where that revenue will cover the costs and expenses and hopefully generate some extra cash at the end of the process. This slide is on cash flow, and cash is king. You probably heard that expression before. Cash flow is basically the best indicator, or really the only indicator, of success or failure of business. And cash flow is a metric that is used to value, I would say, all businesses. So businesses are valued on the basis of multiple of cash flow or perhaps revenue, but revenue value or the sales price value of a business that's geared to revenue, the cash flow sits behind that. So the cash flow is very important. And there are different quadrants to identify the different areas of the cash flow activity. In the upper left corner, it's operating activities. And this basically is, you're running your business, you're selling ski suits and generating cash. And the cash flow from that primary activity of the business is hopefully positive. The second is working capital, and working capital is really changes in certain asset and liability categories. We talked a bit about assets and liabilities. So as you pay off that loan that you use to secure your truck or your vehicle, that is going to be paid off by using cash. So as you make those payments, your cash flow will go down. Financing activities, you don't have enough cash to start the business. You're going to look to a bank to lend you money or look to an investor to invest in your business to generate cash flow. And perhaps if whenever that investor gets paid out, if that's part of your arrangement, there would certainly be a reduction in cash when that happens. Investing activities is something where if you have a successful business, as an example, and your business has excess cash flow, and you decide you want to invest in assets to get a return, and those assets may not necessarily be connected to your business. All right, we talked a bit about break even, and this is a break even chart. And this basically identifies the revenue of a business, the total costs of a business, and the fixed costs of a business. And this gap between the total cost and fixed cost is known as variable costs. So you can see it's variable plus fixed. Fixed costs don't change in the short term based upon activity or based upon volume. So fixed cost might be the cost of your building, the cost of your truck, the cost of your salespeople or your sales effort, cost to advertise, maintain your web page. Variable cost might be the cost to produce the ski suits or the phone cases. And that's going to be more, kind of production or activity related. And that's very much connected to volume. And if we look at this chart, we can see that there is a break-even point, which is the point that the revenue and the total cost and expenses match. And that's basically where your business goes from being cash flow negative to break even and hopefully moving to cash flow positive. So I just put some of this information into units to help us take a look at this. So you can see the break even is in the middle there, which is the point on the chart there. And that is if I sell 10,000 units and my revenue is $12 a unit or $120,000 in total, then my fixed costs at that level are $10 per unit. And my variable costs are $2 a unit. So my total cost is 12, matches the revenue. I'm at a break even. If I look to something less than break even, which is that first column, where I only sell 8,000 units, my price per unit is still the same. I'm still selling it for $12. My variable cost is still the same, still cost me $2 to make that item. But my fixed cost per unit is going to go up because fixed costs don't vary. They don't go down because I'm producing and selling less units. They remain the same. This fixed cost line has not changed. So you can see I have costs in excess of my revenue line, so I have a loss. And then if I take it one step further and now look at a situation where I'm selling more units, revenue per unit is the same, still $12, but my total cost has gone down to $10.30 per unit. Variable again is $2, and the fixed cost is $8.30 because that fixed cost number can be spread over a larger number of units. Now, this is important to analyze, to put together, estimate the forecast, because it's going to tell you at what point or what revenue level you need to be to break even, and hopefully not just to break even, but to generate profitability and generate cash. And this should be something that you want to look at for any business to get a sense of whether or not, as you get through your planning process, this is a business that's going to be worthwhile. It's a business that you want to pursue, and it's a business that has a chance to generate excess cash. Okay, the other sections of the plan, research, and then the supplemental documents and research. Again, very quickly here, if we look at the three scenarios, the gym, ski suits, cell phone cases, let's look at the cell phone cases. What do we need to research? Well, we need to know how many people are buying iPhones in my geography, where I'm going to service the business, or maybe I'm going to be online, which is a little different demographic to look at. So population, the number of cell phones of that make and model, how much, what the earnings of the people are who are buying these cell phones or who potentially will buy them. Do they have enough disposable income, to buy a phone case that has more quality and more style, but costs more money? Maybe they're just going to pick up something, when they go buy their phone at Target. So this is the kind of research that we need to do. And as we develop that research, we want to make sure that we've identified the documents or the sources for that. It would be different for the two other businesses, as you would expect. Okay. Business success and failure. These are some of the items that people point to when they're talking about why is a business successful or why has a business failed. Again, there's lots of items that can be added to this list. I think this is fairly representative of the key things. And you see, planning is pretty important here. If it's good, your chances are that you'll be successful. If it's not good, there's a higher chance that you'll be unsuccessful, or your business would or might fail. Um, Successful businesses that have good plans tend to be 30% higher in revenue than successful businesses that don't have planning. So without a business plan, you might still make it. Your business might still make it, but you have a significantly better chance and a chance for higher returns if you have that planning process as part of what you're doing. Okay, let's go back and start to recap here. So what we have is our business plan from idea to action, the 4-part webinar series. Today was the overview, try to touch all of the pieces of the plan and how you put it together, what's important to include, what are the kinds of things that you need to address. And then the second one is evaluating your idea, which is, primarily the question focused sort of thing. And then the third is research and analysis in August. What sort of data do you need to accumulate, gather, so you can analyze and make the right decisions to go or no go on your business proposal. And the fourth section is the financials, feasibility, forecasting, putting together financial projections. Break even would be part of that as well. That's really part of the feasibility. Is this a business that's going to break even, or is this a business that's not perhaps going to be successful? So I think I'm done. A couple more slides, but basically let's take a stop here, and maybe we can address whatever comments there might be, or whatever questions may have come up.
Yeah, if anyone has any questions, just type them into the chat so that everyone can see those questions, and then we'll try to answer them. And we do have a question. Can you explain in a little bit more detail what exactly working capital activities and financing activities are and are not, and how exactly are they different from other kinds of cash flow related activities?
Okay, so working capital is the header for everything in the balance sheet, which is a financial statement that is of short-term nature. So, for example, if I sell something on credit and somebody's going to pay me for that in 30 days, that's a short-term activity, a short-term asset. That asset happens to be accounts receivable, as opposed to a longer-term asset, which might be the purchase of a piece of equipment that's going to manufacture my ski suits, let's say. And that is an asset, but it has a life beyond 1 year, and it's longer term. So I also have liabilities that are similar in nature. So if I buy leather to make my cell phone cases, and I have to pay my provider of the leather goods in 45 days, let's say. So that is a liability that I have that has to be paid in 45 days, as opposed to a longer term liability, which might be the remaining payments to a bank for a bank loan that don't start until next year. So they're longer term. So working capital changes or changes in those short-term assets and liabilities. Receivables, accounts payable, payroll, inventory would be another short-term asset. So as those balances change, they're going to affect cash flow. If I buy more inventory, cash goes down. If I collect receivables, money that people owe me, cash goes up. Hopefully that helps a little bit. Financing activities are how you fund your business. So I may need to go to a bank because the startup of my business is going to require more cash than I'm able to contribute as the equity participant in the business. And that is going to support the business, but it isn't going to be something that's really short term. And it's going to be something that has a prescribed repayment methodology that's going to go over a period of time. And also it might be participation of somebody else in my business who's going to contribute equity. So I may sell 30% of my business for $30,000 because I need that $30,000 to get my initial business up and running. And that cash is going to give that person a 30% participation in my business. So in 10 years from now, if we sell the business, that individual would be would get 30% of the proceeds, net proceeds. I hope that helps. Anything else?
Any other questions? We have one new message. How is working capital activities different from operating activities?
Operating activities are really the income statement of the business, which is revenue less cost and expenses give us a level of profit. And that level of profit with some adjustments gives us a level of cash, positive or negative. And that is the recording of the actual running of the business. So if I'm running a gym, if that's my business, the revenue is going to be the memberships. It's going to be the one-time fees. Come in and use the gym once or use it for a week, pay a fee. My costs will be for the rent on the building, to have people that are there to work the front desk, or maybe work the juice bar, or make sure that the locker rooms are clean and the restrooms are clean, the equipment is clean. So those are expenses connected to that. And that generates cash as a result of the business activity. When I sell ski suits, I'm going to generate revenue from that. And I'm going to offset that revenue by the costs of producing the ski suits or buying the ski suits and selling them, inventory them. Those all have cost components to it. And at the end of the day, from that operating activity, I should have cash, positive or negative. I think it was versus working capital. Is that the question? So the working capital is, again, the receivables and the inventory, the payables, and payroll. Those are the components that are certainly created from the operation of the business, but are not changes in cash based upon the direct buying and selling of my product or service. So I have people that are doing the labor to make my cell phone cases. That's payroll. That's a payroll expense. And when I pay those people every week, I build up a payroll liability. And then when I pay those people, that's cash out the door to make sure that my employees get paid. That's it. I think hopefully, again, that helps.
Okay, so yeah, so these are they're not terribly difficult concepts, but they are technical in nature. Now, a couple of things that we might mention, as we said, this is a series, and we are going to deal with the financial statements in a lot more detail in a subsequent in one of the subsequent series. And when I send out the copy of the slides, well, you'll have the dates that we're planning on those things. The other thing is that not only the financial statements, but a business plan in general is it's not it's not a simple process, especially if you want to do it well and put your business in the best light. If you're going to go in front of people that are going to invest in your business or a bank to lend you money, they're going to want to know in no uncertain terms what they can expect to make as part of their investment, or how they can expect to be repaid if they're lending you money. And if you have not done a business plan before, it's not impossible. And there are templates on the SCORE site and other things that can help you. But it would probably, I think it's invaluable to have someone helping you who has been through this process several times and has done it and can help you along. So you can, as we mentioned in the beginning, we have mentorship available, and I'm going to put up the link here where you can actually find a mentor, and you can have a mentor and have him help you work through the process of creating a business plan, either to get financing or, as Neil mentioned, and this is actually a published statistic that businesses that have business plans make about on average about 30% more in revenue than businesses that don't. So even if you're not planning on having someone invest in your business or having, or at this point getting financing, certainly from a business operations standpoint, it's helpful to have a business plan, and you can have a mentor that can help you through that process, and it's free and it's completely confidential. And you can get as much help as you want or as little as you need. Any other questions at this point? You're welcome, Boris, for the thank you for thanking us. I guess at this point we don't have any other questions. Neil, was there anything else that you wanted to
No,
put up?
Just to reiterate, Tony, one thing that you said, and that is that, this is a series, so we are going to get into some level of detail in the other sessions, and there seem to be some questions around the financials, and that's perhaps more complicated, and so we've dedicated one session just to that topic. I think that's a good use of one of the parts of this webinar series. So hopefully the people that had questions will come on board when we have that session, and there should be a little bit more clarity than my quick answers to some of those questions. I apologize for that, but we're trying to be sensitive to the time. So thanks everybody for attending, and hopefully we will see you at the next one.
Yes, thank you very much.